One of the main challenges for pension funds is to minimise risk whilst taking the right amount of risk to deliver healthy returns. The new pension rules are requiring more innovative and flexible investment strategies than ever before. And as Julie McDonald reports, Allianz Global Investors is offering innovative strategies to help pension fund managers find the right balance.
The pensions revolution is a tremendous opportunity and responsibility for the asset management industry. And Allianz Global Investors CEO Elizabeth Corley believes pension fund managers themselves have a real challenge. They now have to show they can serve savers and investors as well as the broader economy.
It's like trying to fix a Rubik's Cube if you're a pensions fund administrator or trustee, because no sooner have you got one side sorted than you realise the other side's already out of shape. So what it means when you're designing solutions, whether it's solutions for defined benefit plans who are trying to manage their liabilities, or whether it's solutions for defined contribution plans, you have to have a deep understanding of where the trustees are coming from and their perspective, but also the individual member needs. And it's not just about the product. The product's got to be very, very good. It's also got to be how you explain it, communicate it, and then can support it during a long life.
As the global economy suffers from slow growth and high levels of leverage, fund managers are being forced to change the way they do business.
We are very, very, very adamant that active management is more important than ever. If an active manager can deliver 200 or 300 basis points after costs on top of that very low beta return from equity or fixed income, that is a very attractive value proposition. And we think the only way that fund sponsors and private individuals can really fund their own liabilities.
So in this changing pensions landscape, if the biggest risk for a fund manager is to take no risk at all, how can they protect their investors' wealth and seek growth at the same time? Allianz Global Investors have one of the largest risk teams in the business. I spoke with Wolfgang Mader, who manages solutions for defined benefit schemes.
Risk management is part of our DNA, as I would call it. So it is Allianz as our parent, constantly focusing on risk, and the same holds true for what we are doing in our clients' portfolios. Our track record dates back till 2005, where we started doing risk management in underlying and overlay mandates. We are doing this now for a broad range of clients, being pension funds, also high net worth individuals, family offices, and in total we are running more than 50 billion pounds sterling at the moment in such risk managed mandates.
It's not even connected then to another motorway.
Allianz's infrastructure debt team now provides investors a real opportunity for healthy yield without taking additional risk.
Like for like in terms of a credit rating of infrastructure debt versus corporate debt, and certainly versus sovereign debt and covered bonds, there's an enhanced yield. The rating agencies have published data to show that like for like for equivalent ratings over time, it defaults less.
Until recently, infrastructure debt was not even part of the investment landscape for institutional investors. Allianz Global Investors saw an opportunity and moved quickly. Paul David explains.
Our timing was good. We recognised there was an opportunity to enter the market because banks were struggling to provide the debt that was needed to infrastructure assets. In the 3 years since we started, we've made 14 investments totaling 3.5 billion euros.
And it's not just about innovation in assets. According to Global Solutions MD Joe Moody, innovation in the industry for defined contribution plans must put real people at the very core of all decision making.
Individuals are challenged now to think about their own future and retirements in a way they've never been challenged before. So we as an industry are responding. We're bringing the best of what we have and solutions to the marketplace so that we can deliver them higher quality outcomes, and it's outcomes that are important to the individual. Engagement is very, very important. Being successful at engagement means coming back to some of the simplicity and reducing the complexity so that people feel it's about them as individuals. We really want to get to what's important to them. We want to find pathways in the design of those portfolios that sit underneath that we can not only scale, but we can also tailor directly to better outcomes.
So huge opportunities have been born out of this new era of pensions, and it will take insight, imagination and continued innovation to make sure the industry can live up to its new responsibilities.